Imagine a customer opening a bank account entirely online, signing everything digitally, and the bank still fully trusting that identity. In this course, we'll architect that journey step by step, and you'll learn to think and sketch like an eIDAS solution architect. Here's the path we'll follow. We'll start with the foundations of digital identity and eIDAS, then anchor them in a real banking onboarding and e-signature case. From there, we'll design the technical architecture and wrap up with a complete end-to-end solution and practical deliverables you can reuse. Treat this course as one continuous banking story we keep coming back to. First, we build your language. What identity means, what a credential is, and how trust and eIDAS connect. Then we apply that language to a concrete banking use case, turning regulations and business goals into requirements and UX flows. Next, we transform those flows into architecture, proofing, qualified signatures, and evidence. Finally, we stitch everything into a single end-to-end solution you can clearly explain. Think of this course as a flexible path you can take at your own pace. If you're newer, move steadily through the modules and let the banking scenario guide you. If you're more experienced, feel free to jump ahead where it makes sense. Either way, keep sketching, questioning, and looping back whenever a concept feels fuzzy. Now we'll build the language of digital identity. We'll unpack what an identity is, how attributes and credentials describe it, and how claims, authentication, and authorization work together. We'll ground each idea with simple examples like banking, email, and government portals, so you can confidently explain these concepts to non-technical colleagues. Digital identity is essentially your passport turned into data. Instead of a plastic card, systems see you as a bundle of attributes: your name, ID number, credentials, and permissions. People have digital identities, but so do companies, devices, and services. Under eIDAS, this digital profile must be strong enough to safely sign contracts and perform other legally binding actions. Attributes are the individual facts that describe a person in a system. Your name, birth date, and national ID uniquely identify you. Your address, email, and phone describe how and where to reach you. Status attributes like KYC verified show what you're allowed to do. In banking, these combined details answer two key questions: can we onboard you, and can you sign? Instead of sharing attributes one by one, we usually bundle them into something called a credential. Think of a credential as a trusted container issued by a reliable authority, like a government or a bank. Your passport, ID card, or digital certificate are all credentials that package your data and vouch for its authenticity. A claim is a statement about someone backed by an issuer. You can read it as, "This subject has this attribute, with this value, and I, the issuer, say so." Digitally, that statement travels as a signed token or assertion. The bank doesn't need your entire credential. It just consumes these trusted claims to onboard you and allow you to sign safely. Authentication is how a system checks that you really are who you say you are. It does this in three main ways. Something you know, like a password or PIN. Something you have, like your phone or a smart card. And something you are, like your fingerprint. Strong authentication combines these factors, which eIDAS requires for higher assurance actions, such as logging in and signing. Once the system has authenticated you, authorization steps in and answers a different question. Given your attributes, what are you actually allowed to do? In online banking, you can see your own balances, but you can't browse a stranger's accounts. You might read transactions, yet be blocked from approving a commercial mortgage. Under eIDAS, those same decisions control whether you may start onboarding or sign a contract with a qualified electronic signature. Digital identity always comes down to three roles. First, the subject. The person who wants to access a service, open an account, or sign a document. Second, the relying party. The bank or application that needs reliable information about that person. Third, the identity provider. The authority that issues credentials and authenticates the subject. In an eIDAS context, the relying party trusts the provider's verified claims instead of doing all checks itself. These systems only work when each party knows exactly what it can rely on the others for. eIDAS gives us that common language. Law defines who is liable. Technology enforces integrity with signatures, certificates, and secure channels. Operations keep everyone honest through audits and incident handling. A bank must be sure the IP really knows the customer and that certificates are robust, so users can trust that their e-signatures truly count in court. Now let's connect those roles in a simple flow. The user wants to open an account. The bank wants to trust who the user is. The IP already knows the user through a strong credential, like a national eID. So the bank outsources the heavy lifting. The IDP authenticates the user and returns signed claims. With those trusted attributes, the bank can both prove identity and decide what the user is allowed to do. You now have the core language of digital identity: attributes, credentials, and claims, authentication versus authorization, and the triangle of subject, relying party, and identity or credential provider. Review each term until you can explain it clearly. In the next step, we'll connect this foundation directly to eIDAS and EU Trust services.